Okay, so this is just an introductory video to the valuation exercise. This is not comprehensive fundamental analysis, by the way. This is just one introductory capsule as to how you approach fundamental analysis with dividend valuation. So let's say that a particular company has paid, we'll just write down the parameters that I mentioned. The dividend that is paid currently is 5 rupees per share. This dividend is expected to grow at the rate of 14% for first 5 years. Thereafter, 7% forever. Right? And the shareholders are expecting 24% annualized return on their investment. So the first thing you should do is always draw a timeline. So I will draw a timeline here. And I will put the name of the years 1, 2, 3, 4, 5, 6, 7. Okay. Now the dividend that is paid at time 0, which is today, is 5 rupees per share. Now this dividend is expected to grow at the rate of 14% for 5 years. So the best way is put down a years here, 1, 2, 3, 4, and 5. And put down your cash flows, which are expected in the form of dividends. So the first year dividend will be the current year dividend into 1 plus 14% growth. Okay, so I'll take the growth also from the inputs. And next year would be previous year into 1 plus 14%. And that way it will grow. Okay, na? So these will be your 5 dividends. हर साल का dividend will be 14% higher than the previous year. So the first year benefit is 5.7, then it is 6.5, then it is 7.41. तो आपका dividend जो है 14% के growth से वो 5 साल तक बढ़ रहा है. Now 5 rupees 70 paisa at the end of year 1 is not equivalent to 5 rupees 70 paisa today. These are all future cash flows. But I am standing at today's time and I am thinking what is the price I should pay if I have to invest in the share. So I have to bring all these future values to present value. आज के term पे मेरे को लेके आना है. Which, how will I do it? If I apply my discounting factors on future values, I will get my present value. So it will be 1 by 1 plus R, which is 24% to the power of n. ठीक है ना, यही formula है ना, 1 by 1 plus R is to the power of n. So this is my discounting factor for every year. So when I apply the discounting factors on the future cash flows, I will arrive at present values. What is the present value? It is 19.56. Now, how did I get? What do you mean by this 4.6? So if the company pays me 5 rupees 70 paisa after 1 year as dividend, is the same thing as giving me 4 rupees 60 paisa today. Because I can invest this 4.6 rupees in my preferable investment. and get 24% return, and it will grow to 5.7 after 1 year. Same way, giving me 6.5 after 2 years is the same thing as giving me 4.23 today. तो आज की टर्म्स पे मैंने सारा वैल्यूज को निकाल लिया. माइंड यू, वी कैन ऑल्सो गेट दिस बाय द फॉर्मूला दैट आई हैव मेंशन्ड देयर, द लास्ट फॉर्मूला. So if I apply the PVGA formula, PVGA 0 will be equal to A1, एक साल के बाद का कैश फ्लो, into 1 minus 1 plus G, which is your growth rate of 14%, divided by 1 plus R, 24%. This growth lasts for how many years? 5 years, divided by R minus G. So that, now see, same answer. Can you see? I have gotten the same answer. The answer which I got by the formula and the answer which I got by the tabular approach, both are same. Am I clear? This, I'll just add a note here. So I just hope that you have made a note of the formula. PVGA 0 is A1 into 1 minus 1 plus G by 1 plus R raised to the power of N divided by R minus G. ठीक है ना? Same answer. Now what we have done is we have valued the dividends based on, or we have valued the share based on the first phase only, the definitive phase, because ये 5 साल के डेफिनेट पीरियड में आपको 14% का एनुअल ग्रोथ मिल रहा है. ये उस फेज की वैल्यूएशन है. अभी एक फेज की वैल्यूएशन बाकी है. कौन सा फेज? कांस्टेंट ग्रोथ फेज, 7% फॉरएवर, वो बाकी है, फॉर विच वी कैन यूज द गॉर्डन्स कांस्टेंट ग्रोथ मॉडल. What is the formula for the Gordon's constant growth model? P0 is D1 by KE minus G. So अगर P0 है, D1 है, लेकिन हमारा कांस्टेंट ग्रोथ कहां पे आ रहा है? Our constant growth is starting from year after end of year 5. So I will have to find out P5. So what will be P5? P5 will be D6 by KE minus G. तो हमको 6th year का डिविडेंड लगेगा. What will be the 6th year dividend? It will be the 5th year dividend into 1 plus 7% growth rate, क्योंकि उसके बाद 60% का ग्रोथ है, divided by KE minus G. KE is 24% minus G मतलब growth rate of 7%. So it will be 10.3 by 17%, which is 60.59. This is what? This is the value of the indefinite phase. कि 5वें साल के बाद अगर मेरे डिविडेंड्स 7% एनुअल ग्रोथ से फॉरएवर ग्रो करते रहे तो उसकी वैल्यूएशन होगी 60 रुपीज एंड 59 पैसे. लेकिन ये 5वें साल पे है. आई विल हैव टू ब्रिंग इट टू द प्रेजेंट वैल्यू, विच विल बी 60.59 into the 5th year discounting factor, which is 20.67. तो ये जो पहले हमने किया था, this one is the valuation of the first phase. First, or I would say it as definite phase. And यहाँ पे valuation will be the second phase, which is the indefinite phase. Indefinite phase की valuation is 20.67. अब ये दोनों ही प्रेजेंट वैल्यू टर्म्स में है. सो इफ यू ऐड बोथ ऑफ देम, you will get the intrinsic value of the share, which will be 20.67 plus 19.56, which is 40.23. जो कि I can also write, if I round it off, I can write it as 40 rupees. So that means the intrinsic valuation or the fair value of the share is 40 rupees today. Now suppose the share is currently trading at 50. Is the share overvalued or undervalued? Overvalued, because the prices are expected to converge towards intrinsic value. So prices are expected to fall. It is overvalued. Agar the share is trading at 32, it is undervalued and it will be the right time to pick up that share, because the share prices are expected to move higher, converge towards intrinsic value. So this particular capsule was only to give you some background and understanding as to how we can use the growing annuity and the Gordon's constant growth model to arrive at the intrinsic valuation of the security.